everybody. It is now time for our Executive Edge. Institutional Investor Magazine out with its 17th annual Rich List. The list ranks the 25 highest earning hedge fund managers based on their income for a single year. And 2017 looked like one of the best years for the hedge fund since 2013. Joining us right now with the list, Kip McDaniel. He is editorial director, chief content officer at Institutional Investor. This is one of those lists. If I was last on the list, I'd still be pretty happy about the situation. I wouldn't be, I'd be great. If I'm last on the list, by the way, actually, that's a good question. How much would have I made if I was at the bottom of the list?
Well, there's a first team and there's a second team.
I'd be happy to be on the B
second team. Even the C team. All it would take is $60 million.
I think I could dig that. But at the top of the A team is Brian Higgins, or not the top. He's the bottom of the A team. He got $225 million.
Yes, and that's twice as much as it took to get on the first team last year. As you said, it was a very good year to be a hedge fund manager.
Okay, but to be at the top of the list, do you want to do this as a sort of a top 10 Letterman style where we go backwards?
You'd be testing my photographic memory.
Let's go to the front then. James Dimon's $1.7 billion. Mm-hmm. Let me just ask you, let's just put this on the table before we even begin, because there's always a debate around these numbers. This is not necessarily just the fees that they're getting. This includes the amount, their own capital that is at risk.
Mm-hmm. Yeah,
correct?
People, it's not a, to the layman, it's not a paycheck they're getting at the end of the year. It is their cut of the fees based on their ownership in the firm, and also the amount of money they have invested in their funds that is growing or shrinking.
Kip, here's what I don't understand. I mean, you lay it out and you give some description of who outperformed the S&P 500, who did better than they had done in previous years. I mean, to me, I want a list of the people who made a lot of money because they earned it, because their performance is up, because they beat the S&P 500, and because they have their own money invested right alongside investors, that they are putting skin in the game.
And that's the thing this list shows. There's 5 men who made at or above $1 billion. Mm-hmm. James Simon, Tepper, Dalio, Ken Griffin, and Izzy Englander, and not one of them beat the S&P 500 last year. Now, they'll say that's not our benchmark, but only one of them even beat their historical annualized returns. To get really impressive performance, you have to go pretty low on the list. Jeffrey Edelman is the top performer on the list, 41% returns. He only took home $525 million.
Okay, but why don't we pick on somebody we know? So Tepper calls into the show over the years. So he made $1.5 billion. And you say, what was his gain for the year?
Depending on the fund, it's around 13%. It's not exceptional. It's not above his historical annualized return, but it's pretty good.
He's a great investor, too. I mean, he's a legendary investor.
And that's the thing. How do they match up over years? Have they outperformed? Would you be doing better as an investor if you were giving them your money than investing in the S&P 500? And I think that's my huge question over
with Tepper, I would say. Tepper, I would guess absolutely.
Yeah, right.
Yeah. And you take James Simon at the top of the list. I think anyone would have been happy to give him $1 many years ago because it's been an astounding return.
He's been incredibly consistent.
And he's the only person to be on the list all 17 years. This is his third list in a row at the top of it. He is extremely consistent. David Tepper is extremely consistent. Ray Dalio has been extremely consistent. They just had some of them a bit of a bad run.
So let me ask you a complicated question for you. Of these, who made the most just simply off of fees?
The most off of fees?
Just off of fees. So if you were to take out their own capital and just go straight fee success.
I'd venture a guess.
Okay.
Ray Dalio.
And that's simply because of the amount of money they have under management?
They have, by most measures, the world's largest hedge fund.
Right.
Pure Alpha, their flagship fund, was up, I think, 2.5% last year. So the bulk of the gains isn't coming from that.
Right.
They have other funds. They have All Weather, which was up 13%, but that's not really a hedge fund product. And so I'd have to venture that his $1.3 billion is largely based on the back of the management fee that comes with managing $100 billion plus.
Kip, how do you find out how much the hedge fund owner owns of, what their percentage of the fund is?
That's the secret sauce from our journalists. But we've had the same journalists covering this for 17 years. And, well, not every hedge fund manager cooperates. You'd be surprised how many want some form of accuracy.
Well, that's what I was going to ask. We always heard about, Donald Trump trying to call the Forbes list to try to get himself higher on the list. how much campaigning goes on when it comes to this list, one way or the other. By the way, there's other people who would call Forbes and say, I don't want to be on this list, you got it wrong, and they'd lie, but they try to take their number down.
A lot less than you'd think. I have to be careful because we don't want to reveal sources, but there was one incident this year where we were going to give a bigger number that would have been a bit of a headline number.
Yep.
And they said, hey, I'd love to have that number, but that's not actually accurate. I want this to be accurate. But there is gaming. Some people don't want their name on this list.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.